Folks, don't make this what seems to be a common mistake when it comes to home ownership. I'll get into that and then the latest home prices and insights for York Region for week ending December 11th, 2024. As a realtor, I see many things. I've been into many different homes. Often the stories I'll share on this channel. There's a common theme though that I see out there that I want to share with you. When I'm often looking at a home that is owned, say, by somebody older, more mature, that's the phrase I'm going to go with, older, more mature, sure, it's an updated home. They may have newer appliances, but they're not necessarily top of the line appliances. They may have a newer kitchen, but it's not necessarily where the whole kitchen has been gutted and it's like brand new. It could be that they've changed the countertops, they've changed the backsplash, that they've updated the home along the way. And if it was something that was completely changed, for example, the principal ensuite, for example, they redid it. It wasn't so recently done. It was done a few years ago. Still looks great, great condition, but it wasn't something that they just did and now they're selling. So whatever renos they've done and updates, it would seem to me, especially if they do one piece and another piece, they do it out of necessity and they've enjoyed it for several years. Whereas, here's the difference, a younger, we'll say less mature, less older homeowner, I go into some of their homes that have called me, either they're thinking of selling or I'm bringing buyers there because the property's for sale. The home has been gutted or the kitchen, it's like, man, this kitchen has been totally gutted recently. Appliances, top of the line. There was a home we went into last week. This is a new home. It's less than a year old. It's a new home. It was in a subdivision. New home we're going in, and I could see the kitchen has been totally redone new. And they're even bragging about that on the MLS listing that this is a new kitchen. So think about this. They just closed with a builder. They closed on this new home and they totally ripped the kitchen out and put in a new kitchen. What was wrong with the old kitchen? Well, I can't even say it's an old kitchen. What was wrong with the new kitchen? Because it's a new kitchen. Were the appliances just not up to their standards? Could they not live with the stone countertops that were already installed? That they absolutely got to have these new ones? The backyards, totally renovated. The basement done up like you wouldn't believe. But now the home's for sale. And I know they're not making money on those renovations. They're losing money on those renovations. And from personal people I've spoke with, I've seen them, the younger generation, put a ton of money into this home that they just bought because they absolutely cannot live with the floors the way they currently are. They absolutely need new floors, new baseboards, new trims. They absolutely can't live with the doors that are there now. They absolutely can't live with the appliances that are there now. What I'm getting at is it's all or nothing. So they're buying this home, they're already stretching their budget and completely updating everything. They absolutely got to have top of the line everything. And then financially, especially in this time, a lot of us have felt the financial pressure. They've got to sell this home where they haven't even had the time to enjoy the renos they did. That's a major difference between the younger homeowner today versus the more mature homeowner. The more mature just seems to pace things out a bit more. even if the market turns around, they don't financially feel that pinch as much. Whereas the newer homeowner, they've blown their budget just in the purchase. Homes are much, much more expensive today than they were before. Yes, home prices have not kept up to salaries, but you know that when you buy. And then to put a ton more money in, many times money you don't have, to totally update everything instead of living with it for a while or doing a small piece and pacing it out. That's a major difference. And too many of these newer homeowners are stuck in this financial mess, because that's what it turns out to be, a financial mess that they can't afford anymore to maintain. We went into this one home recently. Again, it was a new home. All the appliances were replaced. All the builder appliances were sitting in the basement. New appliances. They must have spent $40,000 to $50,000 on these new appliances. The home is for sale. So you're telling me that logically the homeowner thought, I'm going to spend $40,000, $50,000 on new appliances, and then I'm going to sell my home right away? No, something went wrong financially. The financial train just went off track there quickly. They're not really planning this through properly. And this is a big, big difference between the younger versus the older. Take your time. You don't need everything immediately right away. Do the math if you can afford it. I don't mean for a few months and then count on home prices going up. That's counting on something like that is really scary. Don't do that. Can you afford it for the long term? If you can, great. Everybody should live however they want to live. You want to gut your home and update it with all the best stuff? Awesome. Good for you. I'm sure it'll be beautiful. But make sure you can afford it long term, not just, I'll do it now, values will go up, I'll take some equity to pay off that loan, because that situation might not materialize the way you think it's going to materialize. And we see too many examples of that today. So be careful when you're talking about these kinds of finances. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. There's a link to my calendar up here, another one below this video in the description. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Here we go, folks. York region, we're going to be focused on detached properties only for Richmond Hill, Vaughan, Markham. These are average sold prices for 3 months. I mean, you can kind of see what's happening here. Richmond Hill almost always is at the top end when it comes to average sold price. Markham and Vaughan usually pretty close together. We're going to start off with Vaughan. Again, detached properties only. For week ending December 11th, 28 detached properties were sold. 4 of those were at $2 million or more. Now, we normally expect at some point in the fall season, well, when fall starts, we see activity pick up. And at some point, activity goes the other way. We see fewer and fewer sales as we're getting closer towards the holiday season and the end of the year. And we've seen it in a lot of the other markets. I've talked about it on my different shows this week. I've got a question mark here. I've got the line showing that sales are maybe coming down, but maybe, because I mean, 28 were sold. The previous week was 25. The week before that, 29, 25, 33. So maybe sales are starting to come down, but it's not so apparent that we've got fewer and fewer sales. It's only fewer by 1 and 2, and it's not every week. Average sold price is $1,647,000. 1,647 is 11% lower than where the average price was this week a year ago. The median price is 3% lower. If you look at the dotted line, the 4-week moving average, it's up and it's down. Overall, I would say prices are kind of flat. It depends on which week you're looking at it, but overall, really haven't moved much over the fall period. 28 were sold, 32% sold at list price or more. That percentage over the last 4 weeks or so has been climbing. Listings though, fewer listings each week, which is normal. Fewer sellers tend to put their homes on the market at this time of the year. And many of the listings that we have now naturally expire at the end of the year. So if you put your property on the market, you listed it, say at the beginning of the fall, expiry December 31st, or just before the holidays, if it's not sold, you don't want over the holiday season when you have guests entertaining, people coming in to look at your home. So we'll see fewer listings, and we'll see the available listings also coming down at this time of the year. Months of inventory sitting at 2.9. It kind of looks like months of inventory is coming down. And usually as months of inventory come down, the effect on price is that price tends to go up. We're not really seeing that right now, but months of inventory, 2.9. Before it was 3.6, 3.4. Kind of looks like it's trending down. That's Vaughan. Let's look at Richmond Hill. 17 detached properties were sold. 3 of those were at $2 million or more. Also, sales of 17 doesn't really look like it's coming down. There's no direct direction that we're seeing there. Average sold price did come way down to $1,698,000. When you're dealing with such few sales, the outliers, the more expensive, the lesser expensive really affect the overall average price quite a bit. So 1,698 is 8% lower than where we were this time a year ago. The median price is 4% higher than where we were this time a year ago. 17 we said were sold, almost a quarter sold at list price or more. Fewer listings, fewer active listings in Richmond Hill, and months of inventory, I would say pretty steady at 4.5 months of inventory, at least over the last 3 weeks or so. That's kind of what we've been seeing. Pretty much a balanced market. Here's Markham. Now Markham is following the pattern I'm talking about. Sales should be trending downwards, and that's what we're seeing. So 14 detached properties were sold for week ending December 11th. No properties sold at $2 million or more. Average sold price also looks like it's trending down. It's really low right now at $1,525,000. Only 14 were sold. It's not a big sample. I just want to, stress that out there. 1,525, 19% lower than where we were this time a year ago. The median price is 15% lower. Prices were flat for a while, but the last 2, 3, 4 weeks kind of has prices trending down. As of the middle of November, we've seen more of the lesser expensive homes being sold. 14 were sold, 36%, little over a third sold at list price or more. Fewer listings, fewer active listings, and months of inventory sitting at 4.9 months of inventory, right at the top end of a balanced market. Here's a quick summary. In most cases, you're going to experience a balanced market out there. There's some neighborhoods that just have way more listings, more than their fair share of listings, and it's going to feel more of a buyer's market. And then there's other neighborhoods, and depending on which price point you're looking at, other neighborhoods, very few properties are actually coming on the market, and when one does, it gets bought up right away. So it's going to be a little bit more competitive. But overall, pretty much a balanced market or a buyer's market when it comes to detached properties. Vaughan, Richmond Hill, and Markham. Thanks for watching. Have an awesome day.